Monkey.
You're kicking it with JLee TV Live. Please stay tuned while we prepare to start our show. Be sure to share this podcast for your chance to enter into our random prize giveaways right here on JLee TV Live. You're kicking it with JLee TV Live. Please stay tuned while we prepare to start our show. Be sure to share this podcast for your chance to enter into our random prize giveaways right here on JLee TV Live. You're kicking it with JLee TV Live. Please stay tuned while we prepare to start our show. Be sure to share this podcast for your chance to enter into our random prize giveaways right here on JLee TV Live.
You're kicking it live with JLee TV, the hottest channel for entertainment, world news, information on local black businesses, as well as financial literacy topics right here on your favorite podcast. Don't forget to subscribe to our channel for chances to receive giveaways, as well as stay tuned for all of our Showtime alerts right here on JLee TV.
JLee TV Live, if you guys haven't heard, is a newest podcast to social media that gives voice to a lot of topics we feel matter to you most. This platform also allows other businesses, entrepreneurs, and community public figures a chance to be heard while discussing world news and what's happening right now. Today, it will be financial literacy. That'll be the head of the topic today on this show. And we will be discussing, like I said, the money seed. So fasten up, feel free to pause, take notes, because today's information is golden. I'm going to give it straightforward for no price at all. After watching this video, you should understand how the basic wealth grounds work in creating the best foundation for a passive income that'll just keep going for generations to come. So you guys just go ahead and sit back. How many Americans are in debt? We have to ask that question. That percentage of Americans in debt depends on what type of debt we're talking about. In general, according to the Urban Institute, more than 64 million Americans carry credit card debt. I think a lot of people know that. A lot of people that got credit cards, even if it's Regions Bank or whatever it is, a lot of people hold credit card debt in this country. And then 45 million Americans have student loan debt. And that's about 1 in 5 U.S. adults, 17.4%, according to the analysis of census data. And then the Experian study also found that 340 million Americans are currently carrying some type of debt. It don't matter what it is, like whether it's a car loan, a home loan, or things like that. They do have some type of debt. So what does that mean? Well, of course, people are swimming in debt. We got to clean it up somehow. So how do we get out of that debt? We do that with a pool of guaranteed money. And a lot of people don't know how to access that. So today on this show, we're going to talk about that. If I was sitting on a park bench, Forrest Gump style, next to somebody, and I asked them, I said, hey, I need some extra money. What do you think I can do to gain some extra money in today's economy, 2023? What do you guys think they'd probably say? I can get a job, of course, go to school, start a small business, maybe find an investor or a loan. But what does that mean? Well, money equals less problems. And we need it to maintain everything we use, what we want, need, and all that. So we have to understand that currency is a big factor. It's like the water that runs through every lake, pond, river, and ocean in every economy in the world. It's what we depend on to gain a comfortable living and a life here. So understanding that, we're going to go through a couple sources of information that's going to have people better understand where money came from, um, and things like that. What started the banking system? What led it to insurance? And why insurance is the smartest way to gain generational wealth. Now, if you didn't receive a pay from your job, would you work 160 hours a month? If you didn't have a chance to win a guaranteed lottery, would you buy a ticket? You know, got to really think about these things. Money is that serious. So people that don't think that it's that serious is going to be crying later when they break a leg, when something happens to their home, or they lose a car, or their child needs something later. A lot of people are trying to just depend on their 9 to 5s when banks don't really give you a whole lot of interest on your money. So a lot of people in this generation are starting to get into a lot of other things like Bitcoin. That's how that really got popular. Not really so much of the guarantee of the actual coin. I think people really jumped on it because it's just a chance to make money. So they're screaming, "Hey, we're in debt. We need money," right? So we're going to talk about that today. Now, I want to give a shout out before I go further into this show to all my partner sponsors, and so give an update on our website. We are currently still updating our website, so y'all just stay patient. I'm trying to make it real convenient for you guys on the web to access the media and information you need from us when it comes to financial services and other services that we're offering through our partners. So I want to give a shout out to my partners. I really appreciate all you guys. You guys have been really supportive and helping me stay on focus and keeping everything straightforward on our mission. I also want to send out another special thank you to all of you guys, all my audience viewers, for actually being patient on these shows. And it's going to get really good today. So today, before we do go further, we're going to take another little break. I want you guys to check out this little video. I thought was pretty brilliant, and and really focus deep on the whole message of this video. Really pay attention. I think it's really dope as we just like take a little quick break. Y'all check this out. Let me pull it up here. Oh, I'm so sorry. Yeah, guys, I didn't know my mic was muted. But I like this right here. If you guys have noticed, I'll pause it right here. Where it says small choices become actions, actions become habits, and habits become our way of life. When I first got into financial advisory, I was going to insurance school and I was speaking to my actual finance coach. And he said something kind of like this. He was like, there's a terminology, Wayne, that they say is fake it till you make it. And I was like, well, I said, I've heard of that. He said, okay, well, do you believe that to be true? And I was like, well, I believe that if you fake it, that it's fake, right? You can't really do it. You got to go learn it and become. He said, no, 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 no. You build a repetition. You build an actual pattern. You keep trying to fake like you're something, your actions kind of sink in and you become it eventually. You know what I mean? So you got to kind of build a pattern. I thought that was really dope what he said right here on this video. You know, that was pretty dope. So what do you choose? What are you going to choose to do with your life? Are you going to prepare? So how do you guys fully analyze that film? Did anyone identify character outcomes of each person in the animated video? Notice how they both had time to build an outcome of their future. We have time now to save, invest, stay healthy, eat right, exercise, things like that. We have time. A lot of people kind of go over things like this video. A lot of people are going to see it on every platform I have it on right now. I got it on a lot of platforms right now. So I don't even really know who's watching and where they're watching. I don't even really know. I'm just doing this pre-recording so this information can get out. I don't have to do this part again. Um, because I don't enforce information on anybody. I just try to set it up, give it to you. Everybody's not going to click it, right? So you got to understand that everything dealing with choice matters to the outcome of your end state. So moving forward, um, recently, if a lot of people don't know, this kind of going off topic, but I had a traumatic incident that happened. It's what kind of got me into this. I had a traumatic incident that happened, me losing my mom and best friend, you know, and that really hit me hard. Um, Trying to balance everything at the last minute, you know, with her passing. I had to kind of figure out what to do with her personal items, or, you know, things like that, how to properly, um, you know, get her body to where it needed to be cleaned. Um, you know, and of course, that's somebody I care about so much. So I wanted, you know, the best burial I can possibly afford, you know, and something so random that wasn't planned, I really wasn't ready to even afford it. So it was kind of threw everything off, never got to really hold of the information. And I wasn't prepared to show me how unprepared I was and we were for catastrophic things in the family, like a loss like that. So serious. So I went and started getting a little education. I said, okay, I want to learn about this stuff because you know, Googling it, you look at it and you're like, hey, this is one of the highest, this is the number one way to cause generational wealth. And they say it everywhere. You know, Fortune 500 magazine, they say it all the time, Forbes. So I was like, so I really want to know, you know, more about it. And then as I dig deeper, I realized a lot of things about life insurance I never knew that can protect families way ahead of time, way before you get to that loss, you know, just like you would car insurance or your cell phone insurance. If you crack your screen, it is still insured. You know what I mean? If it's lost or stolen, it's still insured. There's different ways to carry out, you know, the functions of insurance properly to be used in your life. If you know how to access the right source of insurance. So I've been given an amazing blessing and opportunity to give knowledge about financial services to a lot of people uh, that didn't know existed. And a lot of people, like I said, don't know that you can get money while you're alive. So we're going to talk about that um, deeper into this show. And I'm pleased to tell you all that on this show today, by the time I'm done with this PDF, because that takes a little time to get through that. That's why I didn't want to jump straight into it. So yeah, y'all might hear me blabber a little bit because I want you guys to really understand the importance of this. And the people that don't want to watch it, I want them to hurry up and skedaddle because this is a plug. And I was gonna actually offer this and like and fee and charge for this game, but I was talking to one of my partners and he was like, "Hey, bro, our community needs this, Wayne. So please, please just give it to me. I said, okay, let me go ahead and spend hours and hours developing this portfolio so I can explain it to you in layman terms, because a lot of people is interested in saving their future. Some people really don't care. Some people is like, hey, bro, I'm good. I got a 9 to 5. I got a career. I don't need that. I get life insurance through my job. That's the major thing I hear selling life insurance. Hey, I get insurance through my job, brother. I'm good. Do a lot of people know what group life insurance really is when you sign up through your job? Do you know that the company owns the policy? You don't even own it. So you don't even own your insurance policy. Ha! Did you know that? You don't even own your policy. You have a certificate. So what happens is when they sign you up and say, hey, bro, you've been working for us for 90 days to a year, it's time you qualify for this insurance through this company. You know, you just pay this much. If it's contributory or non, it doesn't matter. You still don't own it. And what that means is you either put into the policy out of your paycheck, or they pay the whole premium for your life insurance policy. And usually it's not that much. It's whole life. You don't get much back. It's not giving you a benefit. And then a lot of people talk to me about their 401k that you can't even access until 65 years old. You know, it's kind of crazy. So where can I start actually gaining wealth? If I can't access my money till 65, if the banks don't give me money back over 1.5% interest on my money in the bank, how can I make money on the bank? If life in listen, man, I'm about to get y'all game. I'm about to get y'all a real seed. But before we do, I'm gonna go to a commercial break, and then we'll pull up the PDF, and then we'll keep going all the way through, and then y'all can tell me how you feel. But right now, you guys are kicking in with JLee TV Live. I appreciate you guys tuning in. We're going to a quick commercial break. Y'all check me out. You're tuning in to JLee TV Live. This podcast is sponsored by
Look sharp and debonair and Brianni Belair.
Look sharp and debonair in Brianni Belair.
Brianni Belair specializes in men's, women's, and children's classic couture.
So look smooth.
Look suave.
Look sharp and debonair in Brianni Belair. Available in fine stores everywhere.
life. Such an organic and unpredictable gift given by the universe. Everything we are and will become all comes from the very experiences that define our future. How we protect our assets matter to the establishment of our legacy. That's why here at Global Legacy Financial, we take pride in our mission statement to dedicate quality products that secure financial stability. We offer free consultation services to help you develop a proper financial needs analysis, as well as offer many brand products to fit your financial needs. Whether you're looking for a living or death benefit, we got you covered. All of our agents are federally licensed and trained to work with you personally when you submit our Easy Quick survey form completed on our web. Learn how you can create a living, death, and financial plan exclusively to you. Need better medications and medical supply products? No problem. Ask about our prescription drug, Medicare supplemental, hearing, vision, and dental plans available to you when you contact one of our team of professionals. Plan ahead and allow Global Legacy Financial to assist you in creating the plan you deserve. Get the proper and affordable coverage you've always been wanting when you contact us today. Every day we're changing lives, one family at a time.
You're kicking it live with JLee TV, the hottest channel for entertainment, world news, information on local black businesses, as well as financial literacy topics right here on your favorite podcast. Don't forget to subscribe to our channel for chances to receive giveaways, as well as stay tuned for all of our Showtime alerts right here on JLee TV.
Appreciate you guys' patience. Welcome back in. You're tuning in to JLee TV Live. We're going to go ahead and get started today on today's lecture. I'm going to try to be quick as possible because I want to get back to my day. Hope you guys are having a great day out there. All right. The money seed. I wrote this myself, y'all. So pat myself on the back a little bit. This is pretty dope, developing this, and I'm glad I did because I don't have to do this again. Hopefully I can just send this to people and you can share it to people and they can just kind of have a better concept of what life insurance really is, what banks compared to banks, and different aspects of money. And so we're going to continue. The money seed. We're going to first start by talking about the currency birth and the history of it. Where did it start? I don't know if anybody really knows about how money was created. A lot of people don't talk about that. And it started way back in Mesopotamia with something called the shekel. All right. It's like a little piece of metal-like material with gold, silver, and plated. It's kind of weird. You can go online and look at it. It got more enhanced later as they went, but they used this to kind of like trade for crops and things like that later with soldiers because they were tired of trading their cloths and crops with the soldiers for swords and stuff like that. So they said, "Hey, we got to find another way to trade." So this system came out, and it was the shekel, and that was around 650 BC before Christ. And that's kind of crazy. Yeah, money's been around that long, and it's crazy because insurance has been around just before this. So because they had to insure their ships going across the oceans to travel with different things like that. So they actually had insurance during the Babylonian um, era, things like that. So we're going to continue to when the Tang Dynasty created paper money. Now this is when they actually created a form to where they're like, hey, those coins are cool, but we want something that is more tangible. We can fold it, put it into a little something, a little sack, whatever. Here, paper, and they created and invented paper money actually until we did it later on with the Philadelphia Mint, and it was actually introduced to Martha Washington, which is George Washington's wife. If y'all don't know who Martha Washington is, and that was way back in 1793. Now moving forward, now we have this money. It's starting to circulate around that era. It has created an actual barter system for people to actually get goods and trades. This tea is so good. I don't mean to throw it out, but let me get another sip. To create an actual barter system. Now they got money, and they're the first people to actually make it rain. Honestly, the Chinese, because they actually called it flying paper. That's what they call it because it can blow in the wind. So they actually made it rain first. But the birth of the banks. Now you have this paper money. You need somewhere to put it. To actually house the majority of the big bulk of it. Because now people knowing that they can use this to get things. What happens? People start robbing. You get people trying to pull heist and things like that. Pirates and things like that. So they had to create a banking system. So around that time, 1800 BC in Babylon, like I was saying before, they had to have some type of holding system. So they created the bank in Greece and Roman Empire, and they actually made a way to actually deposit your money and withdraw your money. They actually made a way you could make a loan with them and pay back interest and all that. Yeah, they had it set up like that, and it's crazy that a lot of people in our culture don't really understand how important it is to be insured until they need it, until something catastrophic happens that they need it. So we're going to talk about the first bank here in this country. First bank here, it was the first American bank in 1782, and it was chartered to be the first financial institution by the United States and the first real bank by the Young Republic. And then I think the first insurance company was by Benjamin Franklin. I think it's still available today, and it was called some weird name. We'll get to it later. But here you go. If you look, you got the central bank right here in the middle. People don't know too much about the banking system. Um, Banks, they're sanctioned by state. Insurance is sanctioned by federal and state. So they have laws that are governed by federal and state to issue out insurance, and banks go by state. Because you notice here, the state seems to get most of the holdings. Then you got the Treasury Department, who actually print the money. Once they actually pulled away from the Federal Reserve contract, they actually now they do their own money, separate from everything. But um, the Federal Reserve now actually, everything was separated. But anyway, the Treasury Department prints the money. It goes up to the investors, roll around to the states, they roll around to the schools, work system, comes down here to the appliances. You get to buy in all this stuff, all this little stuff that goes back into the commercial banks you borrow money from and have to pay interest on. So here you go, that Treasury money going down into the central bank, shooting out to the commercial banks that you get everything from, right? You got to pay interest on that. But guess where you look at where that money's coming from though. That big pot of money. Where do you think that is right there? What do you think a treasury really is? Insured money. Insured money. It's for sure. With the investors, they're ensuring that the state stays funded. Treasury Department's ensuring that everything stays funded. They're gonna make sure that everything's insured in case of any loss with these banks, okay? Y'all stay with me. We're going to talk about three types of banks. We're going to talk about the commercial banking system. What is the commercial banking system? A lot of the ones like y'all know, like Chase, Wells Fargo, and things like that. Those are the typical banks that you guys work with and get interest from, draw interest from. Then you got other investment banks like Barclays and things like that, that are for more higher funding sources for people that are trying to like buy up properties and things like that and do more extensive type of purchasing. Things that may lock you away forever if you mess up that type of money. So those are things that you gotta have that are really sanctioned. And then we got our private banks, which are credit unions, or that are owned by usually people that are just really rich. They say, hey, we're not gonna lose on our own money. They understand the banking system is not for sure. If a bank crashes, then your money's just gone. Banks have to get insurance on their money. It's crazy. So credit unions set up their own way of banking. So they're, if you guys read here, it's a nonprofit making money cooperative whose members can borrow from pooled deposits at low interest rates because it's their money they put in. Now moving forward, this is the whole way insurance works. That's why I pulled this up. This is the best way to kind of describe how insurance works. It works by avoiding risk, reducing risk, accepting, and transferring risk. When you transfer risk, you get insured. Okay, like you got a Geico State Farm or something like that. So you have a company that actually transfers your risk of whatever it may be, and then by reducing your risk, you know that you can do things like drive less, um, probably don't skydive, stuff like that. That's reducing your risk. Avoiding risk is just not going anywhere. Just chilling in the house, things like that, or choosing not to even use a car, just choosing to walk. That's avoiding the risk. Accepting the risk is just going head on, just accepting it. It's just what it is. I'm gonna go take that risk head on. I'm gonna do what I want to do. Blah blah blah. All right, now talking about the birth insurance, that money had to go into an actual bank at one time, right? And now we got that money sitting up in the bank. We talked about how the money was created. Now we have to have a way to ensure the money is safe. So, you know, boom, they created something called the bottomry, was practiced by Hindus, and it was a contract way that the Babylonians actually traded and bartered. And that's what I was saying earlier. They had to do things when they had actually had to transport their coffee and their beans and their metals and jewels and statues or whatever they're trying to get across that water. They had to actually insure it, because what if they hit something and then everything sinks to the bottom, and it might be the most valuable treasures, or you might be trying to make a trade with another ambassador or something, or somebody, or emperor, somebody really important, and you lose that item. They had to insure it. So it was very important that they understood the uses of insurance. Um, and that contract was developed around that time. That's what they call it. And here goes that first insurance system here in the United States. This was the actually first insurance company by Benjamin Franklin, and you see that name right there, contribution ship. They don't even use that. That word don't even exist in our dictionary anymore. That shows you how old this is. But this was our first insurance system that we took from the Babylonians. We took the whole idea of it and brought it here to America. And that was in 1752, if you guys don't know. Now, if you look here, this is a better graph. 1752, Benjamin Franklin had that insurance company. Then you going in, 1897, Travelers Insurance came out. Then they sold their first auto insurance policy, because around that time, they started having cars and things like that, right? Risk go up. Cars, um, trains, people are getting on things like that. The dangers of our technology and the dangers of our society started rising, right? Risk started rising. So these other companies start coming out, these other insurance companies, they understand that, hey, we got to make sure that these people are protected. People don't understand that these are not banks that are coming out like this and protecting you. These are insurance companies, because they're backed. Okay. 1919, you look at Travelers Insurance, sold its first aircraft liability coverage, right? After the Wright brothers did all their things and they started having, airplanes come out commercially. 1935, Social Security Act went into effect. 1944, Supreme Court ruled that the insurance industry should be federally regulated, because it was too much money out there. And that's when the McCarran-Ferguson Act came out, which was basically a fight against banks versus insurance companies. We wanted to see, hey, well, okay, y'all got a lot of money over there. And they're like, no, you got a lot of money over there. Oh, we got a lot of money. Well, what we going to do? Because we got to have we're going to separate it. So they didn't have to have a big fight. And that's what they did. That's when that came out. So you got the insurance companies versus the banks over here. If you want a better breakdown, I'll put it right there in your face. Insurance companies, no lender of last resort. Banks, Federal Reserve, serve as lender of last resort. That should really knock everything in the bud with you kind of figuring out what's the difference right there. Because, like I say, one is federally sanctioned, one is just by state. One is federally and state regulated. Insurance has a lot of backing. You see, it's for aid. That's why it has the big little plus sign right there. You know what I mean? It's for aid. Banks is where you put your money in. Hey, I can go here later, pull my money out when I need it. It's just a house to hold your money. It's not much interest on it. So look at all these companies that came out after that. All these companies started to come out. You got F&G for annuities. You got John Hancock. You got Mutual of Omaha, New York Life, Penn Mutual. All these companies came out to protect people's assets, to protect it through the S&P 500. So people don't really know where the money comes from. It comes through the S&P 500 and federal stocks and bonds. So they take your money, put it in a washing cycle. It flips, and guarantees. Banks, there's no guarantee. Put it in there. It's just there. It's just there. Pull it out. That's what you're gonna get. Insurance, you put $100 into the S&P, for example. If you guys say forget insurance, I just want to do an investment play. Tell you what you do. Look this up. Go take $100, put it into the S&P 500, and put $100. Let's say $100 a month. And probably, about 10 years. Oh, you'll be a couple of millions in that you can pull out all yours tax free. It's pretty dope. But a lot of people don't know how to access this stuff. They don't know about this information. So we're looking at the career scale. right here for consultation services, financial services is really up there. Technology, healthcare, system, retail, media, entertainment, real estate is about $108,000 a year. And by the way, if you guys want a career in insurance, you won't lose. Makes it's smacking real estate out the park, kicking them right there in the butt, and it's more comfortable. People need it, and it's more secured. But if you look at right here at this scale, we're looking at just how typical jobs get paid out in our economy per year, and this is for 2022. I don't really know what 2023 looking like yet because it just started, but it's 2022 graph that you can kind of look at. People that do transportation, $92,000 a year, not bad. Somebody who has a nonprofit company, about $90,000 a year, which is really surprising because nonprofit companies can do so much. They can do a lot. That's probably just minimal, basic. But we moving forward. How do you access wealth within your career? Because over time, you got to pay federal, state taxes. They got all type of stuff coming out. Your FICA, um, everything coming out that goes into an actual policy that you guys don't know that are insured through bonds, through things like that. And that's how you develop your 401k. That's how you're developing these policies that pull out your check. You got a little bit here, a little bit there. That's how you're able to do that, right? But how do you access wealth in whole to make sure that you you maintain your home, your capital assets, and everything, right? And if people don't know what capital assets are, that's everything that you've earned on the side, stuff that you got, like, a little Bitcoin, little stocks and bonds, trades here, anything on the side that you got. You want to actually create your own personal treasury, you know, create your own family treasury, all your valuables and whatever it is. You want to create a life insurance policy and you want to actually create some type of real estate assets, real estate. That's just what it is because you can resell that. It stays with value. It doesn't decrease in value. Property assets, life insurance, and your capital assets. Everything else you do on the side. That's the easiest way to give that on to your kids. That's why you see right now in 2023, we got so many people opening up businesses and trying to start their own business or that's getting tired of their job. They don't even want to work that job anymore. They're like, hey, this is getting played out because the economy changes. Inflation is real. People, y'all can act like y'all not trying to be prepared, like you don't care about it. Y'all don't care about the changes and how this stuff works. That's cool because it don't care about you either. And it's going to keep moving forward. Things are going to change whether you like it or not. So this is a game that you want to focus on. Protecting your capital assets through insurance, protecting your real estate through insurance, protecting your life through insurance. It's insured. Pay into that. You won't lose. Why not just pay into something that you won't lose? So that's the hack to it. Right there, life insurance can help you create multi-generational wealth and keep passing on. Did you guys know that you can actually create your own banking system through life insurance? You can take life insurance and create your own banking system. You can actually go ahead and create a trust account. You create the trust account, right? Giving you guys game. Um, create some policies on the people that's under that trust because the person who owns it is going to own the policy. So you create those policies and you have them go under the trust, right? Return the premiums on those policies. So anytime somebody needs some money, you just go to the owner of that policy or of that trust account and you withdraw money and you give it to the family member. Bring it back on this day with interest, however you want to do it. And you never lose because with return and premium, you get your money back. You pay into the policy, you can pull the money back that you put in whenever you need it. So these type of things help secure families. That's what the Rockefellers did. A lot of people don't even know that the Twin Towers were blown up and funded by life insurance. So in 2001, they actually put legislations on life insurance by actually um, coming up with the U.S. Patriot Act of 2001, and that's where they kind of regulated things a lot more extensively. They made sure that there is no mess ups with life insurance because a lot of people were getting a hold of that money, pulling it out early, putting it on people, and pulling it out early, and just doing some crazy stuff. So it's sanctioned now, thank God. But it is the best way to cause generational wealth. You can't lose. You want to invest in it. While you got a chance. Now, when you get older and you get too old, and then you figure that this is a good money hack, um, it's too late because you have risks that pop up. You get, older, you start having problems. With your health, and diabetes kick in or whatever is happening with you, and they don't actually approve you because you're a risk. So if you're healthy, if you're young, jump on life insurance now. That'll pay you back, return a premium. It's that easy. If you're a little bit older, you're kind of stuck. You're gonna have to go a whole life. There's really nothing else you can do. But if you're younger than 45, you still got a chance, because in 15 years, and 45 and 15 is not even 65. So you still got a chance to actually make more money than you would by your 401k. You know what I'm saying? Um, it's just how you put your chess pieces on your board and how you apply those chess pieces. That's all it is. Um, did you guys know I'm gonna have a few facts for you guys that you guys probably didn't know, but did you guys know that more than 50% of Americans overestimate the cost of life insurance by 300%? 300. Look this up. More than 50% underestimate the cost of life insurance, and it secures you. It makes you, it guarantees that you're good now, not later. No, not just when you die. Again, I have to keep saying this so people that's listening will understand. You got life insurance that will pay you while alive. For example, in my company, I have a policy that actually, you could put your money in. Let's say if it's $50 a month, put your money in $50 a month. And 12 months, that's what? $600. So at the end of each year, I can just go pull out $600 and make my next payment of $50. Now, if I do a 10-year term in 10 years, at the end of that 10 years, which would be 1,000, no, 600 times 10, I need $6,000 in 10 years. That's nothing, you know. But my profit that I get back at the end of that contract, they give me the face amount of that policy. So that $100, that $50 a month could pay me $60,000. So off of my 6 grand that I put in, the federal government, based on the S&P 500 in stocks and bonds, gives me a payout of 60 grand. That's like about $50,000 interest on my money. That's crazy. I didn't gain like $51,000 off. That's crazy. It's so easy to set it up, so you don't have to worry about inflation. Do that stuff now. Get one on your kid. If your kid is 2 years old, get a 15-year term on your kid. And by the time your kid's 17, pull out that $300,000. Boom. Now that kid's set up. It's that easy, y'all. It really is. Life insurance is a really good glitch. And tell y'all another fact: 30% of Americans believe life insurance is only for end of life expenses, like I said before, and leading them to not purchase enough to provide income replacement or allow wealth trader. Well, I'm gonna tell y'all this. Before I got in this, I thought that life insurance was only going to pay you when you die because that's what all I've ever known, and I worked a lot of jobs. Truck driving, they never said anything like that. They never said, "Hey, we got a policy that's going to pay you if you ever need some extra money." They never did that. It was always my understanding that, hey, if I wreck this truck, that's it. Okay. And then that's when they would get paid out. Y'all do y'all research. There's so much out there for you. Um, did you also know that gender, age, smoking, health, medical history are big factors of you getting improved? So if you guys think that you about to get off this live, go get some health insurance, and you've been tearing up your health, record and you just been smoking and drinking and going to the hospital for bull crap, you may not get approved. All right. Another fact: the suicide clauses refer to a clause that usually lasts about 2 years. So what that means is they don't let somebody just go get life insurance for a policy and then go kill themselves. Put it out on the beneficiary. It's about 2 year cold wait. So if that person ends up killing themselves, boom, after 2 years, whatever, But within the 2 years, no. Let me see another good fact. I have a few here. Okay, some life insurance policies exclude coverage if the insured died while committing a felony. A lot of people don't know that. So if you can be insured, some carriers will actually insure you if you do something bad. It's crazy, or die by it, doing something bad, like trying to rob a bank or something. Like, it's crazy. Um, Additionally, if the policyholder was murdered by a beneficiary, the benefits are typically not paid out, which is known as a Slayer rule. So if the beneficiaries kill that person, that's called the Slayer rule. Automatically opted out. Pretty sure everybody should have common sense to know that. Don't be trying to get life insurance on somebody and set them up. Don't do that. And more men report feeling more knowledgeable about life insurance than women, by a difference of 17%. So a lot of men know about this because, men, we love money. So that is what it is. But close to ending my show, I want to ask you guys a question. How much is your life worth? And I mean not just with life insurance. I mean just with everything, with you exercising more, eating more, feeding your spirit more, meditating more, praying more. How much is your life worth? Please keep in mind we are talking about mainly after you pass when we talk about benefits, but what do you think your house is worth? What do you think that your kids are worth in your life? Or all your valuable assets, your favorite lovable pet, all that? Well, if you answer like I did in your head, then nothing. There's no price that I can, compare it to the things that I love most. So if I can ensure that I can protect them, why not do it? You guys got to think ahead, man. Things are changing. We got now spam is like $2, $3 a can now. You know, it's crazy. Everything is changing. You guys got to kind of bend with time. So ensure your legacy. Lock it in and make sure that you guys protect everything that you have while you got a chance. That's just what it is. So setting up a savings that pays you back on a rainy day is really smart. You do it with your bank anyway. You put your money in there so you can pull it out when you need it, right? Why not put it into something that's really going to give you interest? Life insurance does that. Yes, it does. So I want more comments from you guys. So go down into the comments. Let me know what you think about today's show and lecture. I want to kind of make it speedy. I've been online for about an hour now. So we're going to go to another quick commercial break. And when we come back, we'll close our show. You guys are tuning in to JLee TV Live. I appreciate you guys. Make sure you do share this. And we will be back in just a moment. You're tuning in to JLee TV Live. This podcast is sponsored by
Look sharp and debonair and Brianni Belair.
Look sharp and debonair in Brianni Belair.
Brianni Belair specializes in men's, women's, and children's classic couture.
So look smooth.
Look suave.
Look sharp and debonair in Brianni Belair. Available in fine stores everywhere.
life. Such an organic and unpredictable gift given by the universe. Everything we are and will become all comes from the very experiences that define our future. How we protect our assets matter to the establishment of our legacy. That's why here at Global Legacy Financial, we take pride in our mission statement to dedicate quality products that secure financial stability. We offer free consultation services to help you develop a proper financial needs analysis, as well as offer many brand products to fit your financial needs. Whether you're looking for a living or death benefit, we got you covered. All of our agents are federally licensed and trained to work with you personally when you submit our easy quick survey form completed on our web. Learn how you can create a living, death, and financial plan exclusively to you. Need better medications and medical supply products? No problem. Ask about our prescription drug, Medicare supplemental, hearing, vision, and dental plans available to you when you contact one of our team of professionals. Plan ahead and allow Global Legacy Financial to assist you in creating the plan you deserve. Get the proper and affordable coverage you've always been wanting when you contact us today. Every day we're changing lives, one family at a time.
You're kicking it live with JLee TV, the hottest channel for entertainment, world news, information on local black businesses, as well as financial literacy topics right here on your favorite podcast. Don't forget to subscribe to our channel for chances to receive giveaways, as well as stay tuned for all of our Showtime alerts right here on JLee TV.
All right, guys, welcome back. That's the end of my show today. That was, whew, a little sweat off the brow. A lot of information. And no, I wasn't nervous. Was a lot, well, probably a little bit nervous. Was a lot of information. I want to make sure I wasn't doing a lot of rambling and that you guys can actually understand the concept. Guys, listen. This is the best way to access a hold of everything that you really want to give to your kids. You know, you can give it to them in a way you don't have to worry about trying to secure a bag in an economy that is set up for you to fail in so many ways. If you look at people that go to school and college, they get out of college, they're taking the jobs away. You know, they're demanding jobs, but taking the schools away, jacking up taxes, tax on gas, food, everything is really changing. So go ahead and be ahead and invest your money the right way into something that is secure. Insurance is secure. It's guaranteed. Banks aren't guaranteed. They're not secure. I'm not fighting against the banking system, but it's not. You got to understand this. I appreciate you guys tuning in today. Be sure to follow, share, and subscribe to my channel. It's going to get better. I'm going to be doing these lives. Probably not so much financial literacy topics all the time because I'm going to change my live. I want my live to be just random. I want to be able to put a lot of stuff on there, you know. So yes, I am federally licensed to talk about financial services. So if you guys want to ask me any questions or if you want to have any type of debates about any policies or anything that you possibly have, shoot me a message on any social media that you see this on. I don't know where you guys are watching this today, but if you do got my contact, shoot me a message. If you don't, my email is jleetvlive@gmail.com. You can just send me a message that way or go to my website at globallegacyfinancial.com regarding any information on financial services. Feel free to hit me up. I appreciate you guys, and you guys been great on today's show. This has been JLee TV Live.
You're kicking it live with JLee TV, the hottest channel for entertainment, world news, information on local black businesses, as well as financial literacy topics right here on your favorite podcast. Don't forget to subscribe to our channel for chances to receive giveaways, as well as stay tuned for all of our Showtime alerts right here on JLee TV.